Good morning. Stephen Whiteside here with today's edition of Stock Market Timing Television for Wednesday, February 29th, 2012. In the pre-market this morning at 7:30 a.m. on the East Coast, stock index futures and commodities are flat. Now, the Fed chairman's speaking today, so I don't think there's going to be a lot of volatility in the market until he's finished speaking. We saw no major changes on Tuesday. The overall tone of the market is still very sunny, and volatility is still very low, and so not a lot of excitement out there. On Tuesday, the latest U.S. consumer confidence numbers were released, and they continue to move higher. If we just put on a short-term moving average on this chart, you can see that we're trading above the moving average, and we're coming up to the 2011 highs. Now, those highs actually happened last February, so we'll have to see if we can continue to move higher and break through those highs. Now, the story of consumer confidence has not been very good in the last 10 years. We've had major breakdown since the turn of the century, and we've been making a series of major lower highs and lower lows. Now, last year we made a higher low, but we certainly haven't taken out any downtrend line or any major highs. So we are continuing to move higher, and as long as the consumer confidence is moving higher, that is usually good for the stock market. And the best times to buy stocks in the past 40 years has been when on the evening news, the newsman comes out and says that consumer confidence has hit multi-year lows. Those, of course, have been the best times to buy stocks. So with the consumer confidence index continuing to rise, I don't see any reason to be overly concerned about the long-term health of the stock market. Of course, that could change, and we'll keep an eye on the consumer confidence numbers each month. Now, taking a look at the fear index, or the VIX, we saw no changes on Tuesday for the S&P 500, for the NASDAQ 100, or for the Toronto Stock Exchange. Looking at bonds, bonds are still on a buy signal. The money that is in bonds is not there earning interest. You've got to understand that people are hiding their money in bonds right now. And why do I say that? Well, when bond prices rise, the yields on bonds move lower. And if we look at a monthly chart of bond yields, if you look up in the top left-hand corner, that's a time and place when bonds were yielding nearly 5.5%. And if you look at the right-hand side of the chart, we're currently yielding 3%. And so we've dropped dramatically over the past 10 years. So people putting money in bonds are not doing it because of the bond yields. They're doing it because they're worried about something. And the bond market is much larger than the stock market. And I'd like to see some of that money come out of the bond market back into the stock market. And that would certainly fuel a more significant rally than the baby steps that we've been taking over the last couple of months. Looking at the US dollar, it's still on a sell signal, so that's supportive for commodities. Euro had an inside day yesterday, and the Canadian dollar is back above par and holding that in the pre-market on Tuesday. Looking at commodity prices, Tuesday was a good day for the metals sector, but a bad day for the energy sector. Starting with copper, we had a nice update for copper, nice update for gold, and a great update for silver on Tuesday. Looking at the energy sector, another down day for crude oil, but we're still trading above the upper channel line. Looking at gasoline, a little more concern there. A close below 302 would give us a sell signal on Tuesday. And for heating oil, a close below 320 on Tuesday would generate a new sell signal. Looking at natural gas, we're in the channel right now, and a close above 262 would give us a buy signal on Wednesday. Moving on, looking at the major stock market indexes, starting with the S&P 500, no change here. We're still looking at major resistance at 1375. No change for the NASDAQ 100, made a nice new high yesterday. No change for the Russell, still concerned about the Russell playing in the channel, still concerned about the Zacks microcap, so certainly not performing as well as the major stocks at the moment. U.S. bank stocks traded above the channel once again on Tuesday and are now up testing the 200 level for the third time in the last month. Taking a look at energy stocks, no change there. Gold and silver stocks moved higher on Tuesday, still looking for a breakout above 205 on the XAU, but it's a positive that we're back over 200. Looking at semiconductors, they had a nice reversal day yesterday, and once again we're trading above the channel. Taking a look at the weight loss sector, it's performing very well, so we haven't had a slowdown in the new year, and seeing stocks like Nike do very well right now. For Nike, a daily close below 105.26 would give us a new sell signal on Wednesday. Looking north of the border, no major changes on Tuesday for the Toronto Stock Exchange, for the energy sector, for financial services, for gold and silver, for materials, for metals and mining stocks, or for the microcap TSX Venture Exchange. A couple of stocks in the news on Tuesday. SNC fell out of the sky yesterday, and congratulations to anyone who was short SNC yesterday. And Tim Hortons hit a new high for this particular move, and of course it's roll up the rim time, so congratulations to anyone holding Tim Hortons stock right now. Let's finish up this morning's presentation taking a look at our roadmap for Wednesday, starting with the TSX. Not a lot of excitement yesterday. We are technically back on a buy signal, but you really wouldn't know it. We need an intraday close below 12,705 to give us a new intraday sell signal on Wednesday. Looking at Tuesday's trading, you can see at the top that we ended the day on a bearish reversal signal. Looking at the bottom here, the pros and the public were basically intertwined on Tuesday, and so not a lot of excitement either way with the pros or the public. They just went through the motions yesterday. Looking up, if we can take out the recent high, then 12,812.50 is our next target to the upside for the TSX. On the downside, we are looking for a flypaper channel support at the 12,600 level. Any move down to that level, the bulls are still in control. If we break down below 12,600, then the bears are in control. Taking a look at the S&P 500, we had some volatility in the afternoon, still on a buy signal. That would change with an hourly close below 1368.24. Taking a look to the upside, we're still looking for major resistance at the 1375 level. If we can take that out, then we're looking for a move up to 1382.81. On the downside, we're not concerned with any pullback that takes us down to the 1355 level. If we start breaking down below 1355, then we assume that the bears have taken control on a short-term basis. Okay, that's all for Wednesday morning, folks. Have a great day, and I'll talk to you again next on Thursday morning.